right, so I'm going to illustrate the format to you. I want you to take it bit by bit. It's not difficult. You saw in the episode 1 how I was able to bring the format out. So it's not difficult, but pay attention. Don't memorize the format. So this is the format of the income statement under the sole proprietorship. Okay, so I'm taking it bit by bit. You create 2 columns. As I said, these columns are not debit or credit. Someone can even get 3 columns. It depends on the school of thought. Someone can have 1 column. So basically, it is about your addition and subtraction. And the reason why we do the 2 columns is that the first column will take part of the sub calculation, and this will take the sub, and this will take the final calculation. Okay, so first of all, we are about to know our sales. That's the selling price. So we have sales, then you bring it here. Someone can decide to bring it here. The person's not wrong, please. I'm bringing it here, so if there's any calculations that I'm going to do, I will do it here and bring the final here. Then, in case some of the goods that we sold, we couldn't sell, or some of the goods were being returned by our customers, as I said earlier on, we call it return inwards. Returning was the same as what? Sales returns. We deduct that one too, and we arrive at net sales. So when you say net sales, the same as the actual sales or net takings. So this is a selling price method. We made a sales. Some of the goods were being returned by our customers, known as return inwards. That's what I'm talking about. So it's not difficult. All this information will be given to you in the trial balance, with the exception of net sales. Because net sales, you are going to deduct from there. You are going to deduct return inwards from the sales. Then we come to the cost portion. That one we say less cost of sales. And when you say cost of sales, we mean the cost incurred in selling these goods. The cost you incurred in selling these goods you have. So before you can sell rice, you have to go and buy rice. You have to take a car from the market to your destination, or let me say your business premises. All the costs you incurred will be here. So in accounting, as I said in the previous episode, I said that when it comes to the cost of an item, we are not talking only about the purchase price, but any incidental cost that you incurred supposed to be added. So with the cost of sales, let's say that the goods that we sold, we were having some there. It becomes a cost to us. So we call that goods opening inventory or opening stock. Opening inventory. So we bring the opening inventory here. Then, you see, I've written less cost of sales. That means that we are coming to look for the cost of sales. That will be deducted from the net sales. And you could see from the board that I haven't gotten the cost of sales yet. I'm coming to do some calculation before I will get the cost of sales. That will be deducted from the net sales. So my opening inventory, maybe it wasn't enough, and I bought additional goods. So we say add purchases. You've been seeing this thing from our double entry. And mind you, we are using the knowledge from double entry to do all these things. So don't forget about your double entry principles. So I add my purchases. If there's any carriage inwards, when you say carriage inwards, any cost you incurred from bringing your goods to your premises. So add carriage inwards. I'll bring it here. Then I'll add this 3 because it says add. This is part of the purchases. So we add all these 3 and it will give us this figure here. Then, the same way you sold the goods and your customer brought some to you, known as return was, you too, you can go and buy and return some to your suppliers. It is known as return outwards or purchases return. So we say less purchases. Let me start with the return inwards first. So let's return inwards. as I said, purchases returns, PR. So after deducting the return was, then you arrive at what we term as cost of goods available for sale. Available for sale. And I said we usually call it COGAFs. COGAFs. So this is the cost of sales available for sale, cost of goods available for sale. Then finally, you see, initially we were having opening inventory. What if we couldn't sell all the goods that we bought? The goods that we couldn't sell and is remaining is known as closing inventory. We are going to deduct from these goods that were available for us to sell. The reason is that it is not going to be used for this year, so it must be deducted. So we say less closing inventory. So the closing inventory will be deducted. Then, when you take the closing inventory from the cost of goods available for sale, we will arrive at our cost of sales we are looking out for. So the cost of sales will be deducted from the net sales to arrive at gross profit. Gross profit. So this is our gross profit, or it can be gross loss. Please, you get it now? Good. After getting your gross profit, as I said, maybe the owner or the proprietor has also engaged in other activities that is not the sole aim of the organization or the entity, but that activity is bringing in additional income. So if you are getting additional income, we say add it to your gross profit to increase the additional income. So you say add other income. And that other income, you can bring them here. So we have a lot of other income. We have rent received. Maybe part of your warehouse is being used for your competitors or other people, so you are receiving rent. Meanwhile, renting apartment is not your sole activity. Commission received. Maybe you are doing some activity there at your shop and you are getting some commission. Then you can have discounts received. Discount received. We can have profit on sale of an asset. Profit of sale or disposal. Profit of sale or disposal of an asset. That one too will come here. You can have a lot of other income. You total and bring the final figure here and add it to your gross profit or gross loss. If you have gross loss and this is the total income, the other income is bigger, it can offset your gross loss. But if you have gross profit, definitely it will increase it to arrive at your total income. So in the next episode, I will show you so we are still building our format for the preparation of the income statement. If you can infer from the previous video, you could understand that all the items you've been using there, as I said, they are not asset, liability, or equity related. They are all income and expense related. So after getting your total income, then you are coming to the operational expenses. Electricity bill, stationery, light and heating, wages and salaries, they are all part. So after getting your total income, we say less operational expenses. So with the operational expenses, you see I've underlined it, meaning I'm coming to complete something under the operational expenses. There are a lot. So we can have wages and salaries. Please, the list is not exhaustive. So if I don't bring something here, you've seen it in other book, you've seen it in other videos, don't say that, oh, this wasn't part. Please, it was part. But I might not be able to mention all wages and salaries. You can have rent and rate. In other jurisdiction, if you see wages alone in trial balance, it means that wages will be part of the cost of sales. So that expense wouldn't come here. If you see wages standing alone, it will be part of the cost of sales. So, but if it is wages and salaries, it's assumed that it is a payment you are making to your normal workers at the office. But wages alone means that it can be those who help you to offload your goods and you are paying them something, giving them some incentive. And therefore, it is assumed, let me use it as an assumption, that wages will be added as part of your cost of sales. But since I'm assuming that wages and salaries, let's be reintegrate. We have telephone charges, a list of expenses, stationery, okay, insurance, carriage outwards, a situation whereby your customer buys from you and you want to send it to their premise, known as carriage outwards. We saw carriage inwards when we bought from someone, so carriage outwards is also an expense. Discount allowed, you are allowing a discount allowed. Depreciation, I will treat this. Depreciation, there is a video on depreciation. Kindly go and see depreciation. Count depreciation on motor vehicle, plant and equipment, name it, property. So they are all parts. You are going to calculate this and bring their annual charges here. So depreciation of this non-current asset doesn't mean they are current asset. It's the expense. We define depreciation to be the fall in value of a non-current asset. Okay, so all the expenses you can think of can come here. You sum up all the expenses and you bring the total here. Deduct, you can either get a profit or loss. Any figure you see in brackets in accounting can be termed as loss. So we have net profit or net loss. That is it for this. So just take a look at it. It's not difficult. It's not difficult. All this, if it is there, it will be given to you in the question. So final accounts is not difficult. The only thing is for you to pay attention to your format and know how to go about it. Thank you.